Hello, everybody. Welcome. So today we're going to try and keep this relatively short. Simon and I have discussed length a great deal, and we think that shorter is better. And consequently, we're going to aim for around about 30 minutes all told here, because this is a simple explanation of what Bit Tensor is. And I think if you need 90 minutes to do it, that's not going to be simple at all. So Siam has prepared some slides, and I can practically see it now, but there's definitely going to be some drawing at some point because he can't resist it. Can't resist it. Yeah. So we're going to work through probably 15, 20 minutes of Siam explaining this to us in the simplest way possible. If I feel like he's running away or getting too technical, I'm going to drag him back. And then at the end of that, hopefully we'll throw the floor open to some questions. What this isn't is like an investment masterclass. We're not talking about what we've been investing in or what we are going to be investing in or how we invest. This is really for people who are as yet unfamiliar with or unsure about Bit Tensor, an explanation of what it is, and hopefully give you a sense of why we have got this shared conviction in Bit Tensor and why so much of our activity, all of our activity, in fact, is driven into this ecosystem. There will be other webinars, other information available if you're interested beyond this, but we're going to keep this one short, brief, to the point, and very, very simple. And I'm not going to eat any more chocolate buttons. Siam, floor is yours.
Right, let's do this. We are time constrained. So I've already seen a few of the names here. You guys already know Bit Tensor, so you're going to learn nothing today. And if you've seen some of my videos online before, again, you probably won't learn anything new. I do have to stress today is literally just a very basic introduction into what Bit Tensor is. So let's crack on. I am always obsessed with growing mountains and virgin ecosystems within growing mountains. So just a quick recap on some of these sort of growing mountains and then also ecosystems. In the 1800s, we had the oil and railway infrastructure, and anything related to that boomed. We then had the gold rush. Again, anything related to that boomed, whether it's selling, pots and shovels to railway infrastructure that moved gold from the mines to the refineries, etc. Then automobiles, we had 50 plus US car manufacturers. We now have what 3. And then more importantly, between the 60s, 70s and 90s, we had the explosion of computing and coding. Anyone that nailed that virgin landscape became billionaires. And we then entered a new sort of realm of economics where basically new techs always jumped from the shoulders of previous tech. So with the coding and computing bandwagon booming, it then led to the inception and also the booming of the internet. And this is not a fad. Everyone said it was a fad. The internet boom is still here. It's still booming. And life as we know it would not exist, without the internet. And if you were to try to explain what the internet was to someone in 1995, like how many analogies would you need? I mean, internet right now, with hindsight, does everything from OnlyFans to quantum mechanics. Like you can buy stuff and get things delivered tomorrow. So the internet does anything and everything, and there'll still be more use cases. AI will be a lot more. So then we had, I guess, app stores was a microcosm or a virgin landscape within mobile phones, etc. But we then have app stores, which allowed anyone around the world to build an app for the mobile phone ecosystem. Again, people became billionaires from building apps. Then we had the crypto explosion, and for me, the big sort of wet kipper across the face was the ERC20 sort of invention, where Ethereum popped up and allowed anyone around the world to build a decentralized app within the crypto world. And I probably I say this a lot, but this made me go all in on Ethereum at $9 in 2016. Because I saw this explosion. Crypto is this booming mountain, and this virgin ecosystem, Ethereum, popped up, and anyone could build anything they wanted. And Ethereum exploded, as we now know. And again, my first crypto book called The Crypto Book, which I wrote in 2017, I talked about how AI was the future and that I would be looking for an Ethereum style AI play in the future. And I feel I've been wandering the planet, searching for it, not really finding it until a couple of years ago. So AI onwards is going to do what the internet did to the world, but 10x more. This year onwards will be all about autonomous AI agents and then eventually bipedal robots. And then there's going to be all sorts of things on synthetic biology to space. But let's crack on. So since GPT-3 launched, AI has been the fastest growing tech in history. Before that, it was crypto. And one thing that we've seen is that, well, 2 years ago, I stumbled across Bit Tensor. I didn't like it for a good 6 months. And then what happened on October 2023, they had a massive upgrade. And Bit Tensor launched this thing called Subnets. And it completely hit me across the face because I realized this was the Ethereum moment for a decentralized AI network, so to speak. And the more I learn about BitTensor, and I still learn every single day, even though I've devoted for the last 2 years my entire life to BitTensor, I still learn more things. And what I hope to impart to you is that it is not an AI ecosystem. It's an incentive framework, but we'll get on to that. So there isn't a single definition of what BitTensor is. So I'm going to have to use many different analogies. So for the more technical minded out there, in its purest form, it's a decentralized framework for a marketplace of incentive mechanisms. Or if there's a digital commodity, challenge, issue, one can create an incentive mechanism for the network, i.e. the world, to solve it. And so from let's say a bigger picture, sort of a 35,000 foot view looking down, with the invention of TCP/IP, that gave birth or led to the birth of the internet, or the World Wide Web as we know it, in 1983, Tim Berners-Lee. And what the internet is or was is a globally scaled network of information transfer, relay, and dissemination. And again, just the internet, as we know it, has changed the world. And then that was the first big network, really. The second big game-changing network, in my opinion, is Bitcoin, a globally scaled network of not only information transfer, but wealth transfer as well. And then the third big network is the Bit Tensor network, where it's a globally scaled network of information, wealth, and intelligence transfer. So Jensen from NVIDIA had said a really cool thing the other day in an interview. He was saying how Bitcoin was really, or one of the use cases of Bitcoin is that you could take surplus energy, use that surplus energy to mine Bitcoin, and therefore locking up and storing electrical energy, surplus electrical energy. And then you can whiz that surplus electrical energy anywhere in the world for pennies and in minutes. Again, I literally wrote that in my book as well. And the thing is, you can use, again, surplus electrical energy instead of just using it to come up with or using that energy to do mathematical puzzles to make Bitcoin. You can use energy for the creation and innovation of intelligence. So yes, BitTensor is known as an AI network at the moment because a lot of the independent AI startups or the subnets within BitTensor are all focusing on AI things. What you'll see as BitTensor matures is that anything can be launched on that, anything that wants to solve a problem. So let's talk about, in my opinion, the easiest way to understand BitTensor if you're completely new to this. And I'm going to mark the script. So I've got my little doodle pad pen over here. Let's try this on Zoom. Zoom. No, that didn't work. Here we go. Pen. Right. So we all know Google, right? Well, Alphabet is the big umbrella company. That is like the big umbrella. And below Alphabet, you have hundreds of mini companies, or not so many. I mean, you have YouTube over here, which is a big one. You've got Google Maps. You have DeepMind. You've yeah, with Gemini, you've got all sorts of things. Google does a lot of things, search engine, PPC, AdWords, all that sort of stuff. And if you believed in the future of Google and you thought it was going to do well and you wanted a piece of that upside or downside if it did really badly, the gross value capture mechanism is their ticker or their token called Goog. You log into your Hargreaves Lansdown or Charles Schwab account and you go and buy Goog. And you get the entire upside or downside of the future of Google. Well, BitTensor is exactly the same. And Bittensor is the big umbrella. Okay, it has a thing called the Yuma consensus. It's basically the world's best framework or protocol that allocates resources in a decentralized manner. Okay, so below this umbrella, you have at the moment 128 independent AI startups. And it's great. I can see Jill here. Jill is the CEO of Sunday Bar. And so she owns and runs Subnet 121. And so this subnet solves for generalized agent creation. So if there's a business out there that wants to get rid of their useless HR person, sorry if there's any HR people here, but if I'm a business, I go, hey Jill, I've got 4 HR people here which I don't think are valuable. Please build me an agent that does everything they do, and so I can disintermediate those HR people. They'll take a brief, they'll convert it into magic lingo, and then her magic subnet will put that brief out there, and the world of machine learning engineers and whatnot will help build that agent. I can use it in my business and then save some OPEX. So, I mean, that's just one subnet. There's 128 subnets. And we'll talk a bit about the subnets later. So, yeah, so I just used Jill there because I can see she's here. Now, if you believed in the upside or the future of Bittensor, you can be very simple and just buy the gross value capture token out there, which is called Tau, T-A-O. So Tau will basically give you all the upside and the downside. And yes, yeah, in fact, let's leave it at that for the moment. I could go on. I'm very cautious of the time here because I could talk for 2 hours and still have more to talk about. So, in essence, Tau is the S&P 500 of independent AI and decentralized AI startups. And so imagine, in fact, talk about S&P 500. Why do people buy the S&P 500? It's because people look at the US and go, Team America, hell yeah. And if you wanted to capture the upside of America and Team America, you go and buy the NASDAQ or the Dow or the S&P 500. If you liked the UK, God forbid anyone seeing prosperity in the UK, you go at the gross value capture mechanism for the UK is the FTSE 100. Whoopsie, FTSE 100. And I am hoping Trump sends Delta Force in to capture Keir Starmer. But the but imagine, for example, oh yeah, if you like China, you can go buy the Chinese stock market, etc., etc. But imagine for a moment that in the middle of the Atlantic or the Pacific Ocean, a brand new country popped up. And it wasn't inhabited by humans. It wasn't a country. It's a brand new country which is going to be completely filled by AI. It's a country of AI. So if you really believed in the future of AI and you wanted to buy the gross value capture of the future of AI, this is Bittensor. Bittensor is this deserted island in the middle of nowhere, and it looks like this. But give it time, it will look like this. And the reason it hasn't entered the public's attention or sphere of knowledge at the moment is simply because Bittensor is only 3 years old. It's taken a while to spool up. On the 13th of February 2025, it launched a new upgrade where it's called Dynamic Tau, where basically all of the 128 subnets or any subnet that was launched in Bittensor had its own token. So yes, you could buy Tau, which basically encompasses everything, or if you really liked a particular subnet, you can actually just go and buy that subnet token. And so really, in my eyes, there's three phases to Bittensor. And the reason we haven't seen a ChatGPT moment for Bittensor is because we're in phase one down here. Phase one down here is infrastructure building. So if you're going to turn a massive deserted island like this into this, you have to put infrastructure down. You have to put down the foundations, the cement. You've got to build the roads, the fiber optics, the satellites, like everything you need to run a country, everything from sewage systems. You need to build the infrastructure. Now in AI, the infrastructure is, well, if you wanted to look at it top down, it's power generation, storage, and distribution. Then it's data storage and cleaning and labeling, and then you've got the pre-training. Oh, this will take forever. You've got pre-training training, you've got fine-tuning, you've got evaluations, you then have to deploy it, you've got reinforcement learning, so like and more. So that, I guess that is the full tech stack. I'm being very rough there. But in order for all of this, oh yeah, and compute is sort of here as well. This is all infrastructure. This is unsexy stuff. This is like building a refinery, a gold refinery, or just yeah, a construction company. It's not sexy. However, all of that infrastructure leads to something, and it leads to intelligence. So, for example, let's use CCTV. At the moment, let's take London. I think it's the most heavily surveilled area in the world. It has the most CCTV per capita, I think, or per square kilometre. So at the moment, see, putting CCTV cameras all over a city is a big infrastructural project, isn't it? And what that's doing is it is creating probably petabytes per hour of data, but it's dumb. All it is, it's data. And you don't get any inference from it. You don't get any intelligence from it unless you have a human looking at the feed and then going, oh, that situation looks dodgy. But what if you could plug in an AI that would absorb the entire footage of all of the CCTV in London and then derives intelligence from that footage? So they're taking that pure raw data, applying some sort of algorithm which is predictive, and then it can go, oh, there's something dodgy happening over here in Chelsea or wherever. Send some coppers there just to diffuse a potential situation, or this person just pickpocketed someone and it chased them all the way down home, and they arrested them at home, or whatever. So this is just a very bad example, but you need the infrastructure to derive intelligence. And then stage three is product market fit. So once you've got all the infrastructure and you've got an ability here, whether it's predicting the weather better than anyone on the planet, predicting for the market, or who knows. Once you can then build a product and get it out there and sell it to the world, and eventually have the sort of the chat GPT moment where it gets millions of users. So yeah, at the moment, yeah, there are some subnets that have gone straight from 1, 2, and they're already at 3. They're not like world-changing products though, and we have many in the sort of phase 2 area. So I'll talk about the subnets in a bit. But yeah, also understanding Bitcoin is a good way to try and understand Bittensor, because when you look at Bitcoin, it has an emissions curve. So Satoshi Nakamoto, whoever he, she, or they were, they created it so that a vast majority of the Bitcoin emissions would happen in the first decade or so. So this is where we are right now. I can't delete it. Oh dear. Yeah, we're here in sort of 2026 where we've got like 92% of the circulating supply already out there. And because in the very early days, a lot of the supply was basically like a fire hydrant, and any of the early adopters, you've heard all the stories of how miners made dozens of Bitcoin a day from their laptop, etc. And so Bittensor, by the way, has exactly the same tokenomics structure. There's a maximum of 21 million tau that will ever be made. There's a halving every 4 years. It's exactly the same. But the thing is, Bitcoin only incentivized one thing and one thing only. and that was compute. Satoshi realized that in order for Bitcoin to survive and thrive and prosper, it needed to be the most secure thing on the planet. It needs to be the biggest supercomputer on the planet and the most secure protocol on the planet. And so they incentivized one thing, which is compute. So if you had some compute, you could connect your compute to the Bitcoin network, and then you'd be rewarded. Well, Bit Tensor incentivizes almost an unlimited amount of things. It incentivizes anything you want it to. So Jill of Sunday Bar is incentivizing BitTensor to create really good generalized agents to help business owners. But, there's another one called Zeus, Subnet 18, which incentivizes the network to come up with the world's best weather forecasting, which it does. It incentivizes anything that you want. And so a way to sort of compare Bitcoin mining and BitTensor mining, the incentive is raw compute for Bitcoin, intelligence is BitTensor. With Bitcoin mining, computers have to solve a maths puzzle every 10 minutes. A BitTensor, it could be anything. Now, the emissions flow for Bitcoin is that 100% of the emissions, as in the Bitcoin that's being sort of pumped out into the world, all of it went to miners, i.e. people with computers providing compute power. With BitTensor, it's a much better system. So you have 18% of it, of the TAO going out there, the subnet tokens going to the subnet owners, 41% going to the validators, because and then 41 to the miners. A way to explain this is that imagine if you're a subnet, it's like setting up a school. And in this school, you have some teachers, and then you have a whole bunch of kids doing the exam. The kids doing the exam are the miners, so they're doing the hard work, and the teachers are marking the kids' work. They're seeing, are they cheating? You can't just put the answer, where's the working out for your answer? They keep the system honest, and they check and they verify calculations. And then the subnet owner is the headmaster that chooses what subject they're doing, what test they're going to do within that subject, etc., etc. In terms of consensus, Bitcoin has a thing called proof of work, and BitTensor, without getting too technical, you just call it proof of useful work. So instead of directing energy just to solve a maths puzzle, you're directing energy to create new things. So to understand a subnet, I guess it's important to try and understand the flow. Now, the example I'm going to give you is an ultra. I'm just going to mute everyone. There we go. Everyone's muted. There we go. Now, the example I'm going to give you is extremely basic and not quite accurate, but I think it's the best way to convey how a subnet works. So let's say there's a subnet that has text to image. So here is a user, you've got Joe or Julie Blogs up here, and they want a picture of a pink fluffy dinosaur riding to the moon, etc. So the user will type, I'd like that, blah, blah, blah. And that prompt, so the prompt would go to the validator or validators, and then the validators go, right, this person wants a pink fluffy dinosaur, go. Now the miners in this particular subnet are people that are running some sort of AI algorithm or some image generation algorithm. And so straight away, all the miners, so in every subnet, you have 256 slots or miner slots. So in this very simple example, every miner creates a picture of a pink fluffy dinosaur flying to the moon. The dinosaur pics, all go to the validators. So in this example, the validator gets 256 images of pink fluffy dinosaurs in the space of a second or a couple of seconds. And then it's up to the validators, and there could be many for a subnet, to choose what is the best picture out of the 256. So the validators have to then run some code to automatically and automagically figure out of the 256 images, what are the best three. Those three images are then sent to the user. The user is then very happy, and it's up to the subnet owner whether they'll ask it, which picture did you prefer the best. The user could say, I like the middle one, and then whichever miner made the best one could get an extra bonus. So this is a very simplified version of a subnet, and in only 10 months we've come a long, long way. And this is this is an out of date picture already, and this is self pruning. So Bittensor is a self pruning ecosystem because on one hand you have half of the people in Bittensor red teaming and trying to poke holes in it, and if there's a hole in an incentive mechanism or a subnet, they will exploit it. And so the subnet owners, they're like, I know there's a hole which everyone's exploiting, and they'll patch it up. And so it's a self-healing, a self-pruning ecosystem. And if a subnet doesn't perform, it gets deregistered. So just looking at this already, Polaris Cloud got deregistered. Merit, don't know what that is. Yeah, I could look at all of these, and there's quite a lot of stuff that has already been deregistered. So if you don't perform, then you're going to be kicked out. But in terms of if you look at it in terms of categories, so we have a whole bunch of data, training, inference, we've got in storage, we've got all sorts. And this is a very old tweet that I made, and this tweet is probably 4 months old, but it gives you a rough example of things. So if we were to look at gradients, so subnet 56. So what this does is the world's best auto machine learning platform, almost one click. And it's already beating the world's biggest incumbents from AWS, Google, Together AI. It's cheaper and more efficient. If you look at Ridges is the world's best open source software coding assistant. So to put more flesh on those bones, the two big boys in the software coding world are Anthropic's Claude Code, and then you've got Cursor. Now, combined, these two do over $1 billion worth of revenue per year. And with both of these companies, they effectively have like a magic black box. And we don't know what's in this magic black box, but it's their code. So when a user is using Claude Code or Cursor, all of the results are coming from this little black box. So a very clever chap called Shaq came along and thought, how can we spill open the guts of Anthropic and Anysphere, who own Cursor? How can we get the world to create the world's best software coding assistant and recreate this little black box? So what Shaq did was that he incentivized the Bit Tensor network to go, hey, we're going to build this Claude Code Cursor competitor. Miners who will be data engineers or anyone really, what you need to do is come up with with your agent, and there's a thing called a SWE bench. So this is for software engineering, where it has 500 of the hardest sort of software engineering questions from, hey, check this code out, fix this code, do this, do that, and every Claude Code and Cursor, they all benchmark on that. So they all rate themselves based on that. So what happened is that with Ridges, Shaq did a winner takes all. So whoever was the top miner, so whoever had the best code was the top miner for that day, or for as long as they're top of the leaderboard. And the miner would earn anywhere from $40,000 to $70,000 per day. And then what would happen is that the code for that agent would then be open source, so the whole world can see. And then someone else could go, oh, I like that. I'm going to control, copy, and paste and add my own little edits and then make a slightly better bot or agent. And then that person would be the best for that day or for that hour, etc. Now, things have changed slightly, but what's happened in the space of 6 months, they've gone from zero to already the world's best open source software coding assistant. And I think it's just a matter of time until they eat Anthropic's and Cursor's lunch money. So they're literally launching their real world product as we speak. They've been doing a beta launch so far. So that's rather impressive. If we have a look at GPU rental, so in the real world, if we look at the NASDAQ, there's a centralized compute company called CoreWeave. They did an IPO for 23 billion, and all it does is just GPU rental. So if you want to rent an NVIDIA H100 computer, you can go to CoreWeave and you can spend $4.76 an hour to get that. Or you can go to Subnet 51. It's now called Liam. For some reason, they got rid of the C bit. And you can rent that exact same GPU for $1.35 an hour. Or any other GPU, a lot cheaper than anyone else. So that's compute rental. We have video. This is one of my favorite subnets. Subnet 85. They are the world's best video upscaling and compression company. So they can compress a video file by 96% without any perceptual loss of quality, which is incredible. Imagine how many or hundreds of millions of dollars Amazon Prime or Netflix spend every year to compress video footage. It's a lot. So they're going to market as we speak. And then a sister company of video is Hippias. Hippias is literally incredible because it's the world's cheapest online cloud storage. This is actually a really bad example. I'm going to exit the slides and let's just go to Hippias's website. I'm fully aware that I'm overrunning here, but I think it's probably worth talking about. So this is Hippias. They're already live. If we go to the pricing and you can have a look at how competitive they are. So if you look at storage amounts, so this is really for businesses, not like retail like you and I or whatnot. But let's say you're a business that have a high amount of storage. So let's say you need to store 1,000 terabytes. Now, the crazy thing here is the egress amount. A lot of these providers like Google, Amazon, etc., they penalize people that want access to that. So let's say you're like a content delivery network where, yes, you need to store a lot, but you also need to have access to it. And let's say all of it. Well, you're going to get penalized. So Google, to store 1,000 terabytes with, let's say 500, so half of it needs to be in and out, in and out. Well, Google and Amazon are going to be charging you $61,000 to $90,000 per month. Hippias, you're only going to be paying $3,000 a month. It's absolutely incredible. Even the nearest proper competitor storage is still a country mile away. So and by the way, video uses Hippias for storage as well. So I'm just waiting for this scenario where a big content delivery network like Amazon or Netflix goes, oh, wait a minute, we can compress all of our files by 96% without perceptual quality loss, and then we can store it on Hippias. Or, I mean, that's unlikely to happen, but what's more likely to happen is that Hippias and video go after Amazon and Netflix's competitors, and therefore creates more competition in that respect. So let's just swap sides. There we go. Let's go through these. So that's just a few, and I could go through a whole bunch of them. There is a picture which I have here, and I just add to this as I see the results of certain subnets. Let's have a look. Yeah, so there's another cool subnet which we started working with relatively recently, which is SafeScan. So it doesn't have to be AI related, so to speak, but these are the world's best melanoma detection, optical detection algorithm. So there's a benchmark within optical melanoma detection called the HAM 15,000. So it's a data set of about 15,000 lesions, and then people run their algorithm to check. And SafeScan, Subnet 76, is already the world's best at that and getting better. So Bit Tensor is doing everything from compute to cancer detection to novel drug discovery. It's absolutely incredible. So this is just like, being in an ecosystem. It's like playing around with the internet in the late 90s. And it's not just, little old me from Norwich that is happy about this. We have Bit Tensor Jesus, Barry Silbert. So he basically was instrumental in booming Bitcoin. So he's a massive VC, multi-billionaire. He owns so many, or pretty much every crypto company you can think of. He owns DCG, which owns Grayscale and many others. And he's sort of come out of semi-retirement, and he's now the CEO of a brand new company called Yuma. So he's basically doing everything he did to help Bitcoin back in the old days, but trying to do that with BitTensor now. So he's an active CEO for Yuma, and he's doing all sorts of infrastructural type stuff. So, Mark, that's the end of my quick slideshow. Hey, how long was that?
It's already the end. Gosh. How long was that? 20 minutes?
That's a record for me.
35 minutes. But yeah, I mean, I'm going to say you did a decent job there. So yeah, thank you. It's good going.
What did I miss?
You missed my new analogy with the strawberry fields.
Oh, you share the strawberry analogy, Mark's strawberry analogy.
I only invented it earlier today, but yeah, I liked it. Go on, then I will. So, because it's not really AI, it's anything. The incentive mechanism that's built into Bittensor means that you can incentivize anything that you like. So in my imaginary analogy here, with Siam and I are both running strawberry farms adjacent to one another, and Siam pays his strawberry pickers on a day rate. So they just get to wander around in the sunshine, pick some strawberries, and bring the strawberries back to him at the end of the day, and he'll pay them by the day. And my strawberry pickers get paid by the strawberry picked. So the end of every day, I am only giving money to people that have delivered value. And it's that incentive mechanism that means that my strawberry farm is going to be much more efficient, much more cost efficient, and much more profitable than his strawberry farm. And it's the same situation with Bittensor. As long as you've got the incentive mechanism defined tightly enough, it's not about having the weight in the basket. We're just going to weigh the strawberries. So putting some soil or some stones in isn't going to make any difference. We've got a validation mechanism to check that what you're delivering me is just strawberries. But my strawberry farm is going to win out there every single time. When Siam was talking about ridges and how they are taking on shoots are just paying salaries. And Shaq at Ridges only pays for people that actually improve the code. That is my strawberry field analogy, and I like it. I'm going to keep building on it.
You like your own analogy?
Yeah. I'm a big fan of it. I'm going to get strawberries to eat while I'm delivering the analogy, and I think people are going to go, "This is all working." So we've had some questions in. Let's work through some of those. How does the value of subnets connect to the value of tau?
Great question. I'm going to have to share my screen. Sorry.
You
need more doodles. We need more doodles. So we have to look at Ethereum for this. So Ethereum, let's say, created this lovely ecosystem, and it's got all sorts of projects being launched on Ethereum, and some of the projects went wee to the moon, and we've got Ethereum, which is basically the whole thing. Now, with Ethereum, where anyone building on the Ethereum network, if their crypto or their project went to the moon and did really well, so you could take a shitcoin like Bonk or like Dogecoin or whatever, there's no real linkage between the success of Bonk and Ethereum. I mean, Ethereum is used for gas fees and whatnot, but there's no link for all intents and purposes, because you could just go and buy Bonk or Doge or whatever, and Ethereum is not really connected to it. Now, let's say in Bittensor, you have a whole bunch of different subnets, and I don't know, let's just say this subnet goes to the moon. It's the breakout subnet. Let's say it's Ridges. We're big fans of Ridges. Now, if Joe Bloggs over here was looking at Ridges, I can't draw to save my life, and they wanted to buy ridges, which is subnet 62. They couldn't just go and buy ridges. No, no, no. There's like a bouncer in the way. In order to buy the subnet 62 token, you first have to go and buy tau. So you have to buy tau, and then you use that tau to swap for subnet 62 tokens. So what this means is that, you don't need every subnet to be amazing. Literally, you only need one breakout subnet that starts making millions of dollars per month and gets all of the eyeballs of the world. It's just the chat GPT moment. And the only way to buy it is to first of all buy tau. So the chart of tau, the price of tau will then start going up. And then that tau is used to convert into ridges. So then the charts for ridges will then go up. So I'm being a bit extreme here. Of the 128 subnets right now, all 127 of them could flop, and one does a breakout, and tau still goes up. And in reality, in my own personal opinion, if you take all of the subnets in Bit Tensor, I'd say 50% of them are absolute garbage and shouldn't deserve to exist. We then have another 25% which are just meh. And then let's say the remaining 25% which are good, let's say. And like with anything, you'll have some absolute standout subnets over here, the top cream of the crop, so to speak. And so that is the linkage there. Tau, you cannot do anything in Bit Tensor without first buying tau. And that's where Solana messed up, ETH messed up, all the other sort of ecosystems messed up.
And Simon's point there about, you don't need every single subnet to succeed is absolutely true. The current market cap of Bit Tensor as a whole, all of it, everything, is about $3 billion. And the market cap of Cursor, which is Ridge's competitor, is somewhere north of $30 billion. So it's not inconceivable that a single subnet could, in this crazy AI evaluation world, be worth 10 times what all of Bit Tensor is worth right now. Certainly OpenAI, although it's got no public valuation, it is almost certainly north of 300 billion, possibly north of 600 billion. That is a huge multiple on the Bit Tensor market cap. Yeah, serious nod from Siam. Okay, how does the value of tau subnet's end product produce revenue for the owner, holding company, and fiat? So, complicated question.
Very complicated question. So every subnet is different. And so let's say you have subnet over here. That subnet sometimes is just on its own, and so you got like one or two people running a subnet over here, and there's no limited company, and they're building something, and the goal is to make money. So they use, let's say, Bit Tensor over here to help build the product and maintain the product, etc. So that's like the workforce, and then they'll eventually have a product which they can sell, and then hopefully the market will bring in real world revenue, so dollars or pound sterling or whatnot. So the subnet will make the money, and then the subnet owners will have to choose what they do with that money. So a lot of what's kosher in Bit Tensor is that a percentage of the revenue will go into their own subnet token buybacks to maintain their chart price. And then you could have more extractive companies where behind the subnet there's some sort of LTD, or even the fear of or even a PLC, let's say. And a lot of people fear those three letters PLC because it sounds scary and dodgy or whatnot. But there have been some bad subnets where they've used Bit Tensor to create the product and make money and blah blah blah, and all they're doing is just siphoning money out of Bit Tensor, out of the subnet, into their own pockets. So companies like that, or setups like that, they quickly get found out. It's not very well. They don't last long, if that makes sense. And so it leaves a very tricky situation where, let's say you are a PLC, a limited company or a PLC, you know, one of the questions that will always pop up is, where are the loyalties? Is the loyalty within the subnet token, or is it with the company? And every single subnet will have different priorities, etc. What am I missing here, Mark? Have I even answered the
Yeah,
question?
no, you're not missing anything really. It in looking where the value is captured in any business is always key to it. With any business that's got shareholders, you want to know how much the directors are getting paid. You want to know how much dividend is coming out, or whether they're going to be share buybacks. And over time, those businesses will set precedents and will behave in a certain way that means that certain people are interested in investing in them or not. And it will be the same situation here. We have to keep a close eye on what subnet owners tell us they're going to do with revenues and what they are actually doing with revenues. We have to work out whether someone is going to be extractive or whether somebody is going to be hugely supportive of their alpha token. We don't want to be, as investors, mugged off by buying the alpha token and supporting building someone's business if they've got no intention of supporting that alpha token when they have real world revenues flowing in. Sometimes you can take them at their word. Sometimes you need to get it written down in a contract. It is a very, very difficult situation for individual investors who don't always know who's running subnets and aren't in the privileged position that we're in, where we know many of them personally. They don't have that visibility that we have. So they run the risk of investing into subnets that we wouldn't invest in because we don't believe that the value is going to be captured in the alpha.
Yeah. Now, one of the things it doesn't really answer this question, but is somewhat adjacent. This is a brand new market, so it's like being there at the birth of the S&P 500 or the FTSE, etc. But it has a very unique trait that no other market has. So, for example, here we have ridges, and what happens is, when this is getting a little bit technical, but hopefully I'm not going to lose anyone here. Let's say this is the subnets chart, okay? And every single day, the miners of this subnet are being rewarded, and they're being rewarded in the subnet token of that chart. So let's just call it ridges. We've got subnet tokens, and we've got a whole bunch of miners over here. And every day they're earning an amount of subnet token. Let's just call it alpha. Alpha is just an easier way to say subnet token. And so when you look at game theory optimization, you have to assume that all the alpha, all the subnet tokens that the miners are earning, they're just going to sell it. And so if you can look at the sell side here, so let's just say, with ridges at the moment, if you look at the miner per day, this is actually the amount of subnet tokens that they own times by the price of tau. So long story short, is let's round it up, 145 tau per day. So what's happening? You have to assume that 145 tau per day it could be potentially sold, and so in this example, let's say it is being sold every day. So 145 tau. Let's say the price of tau is $300, which isn't far off. So 145 times 300. So at the moment, there's 43,500 dollars of potential sell side per day. So let's times that by 30.42, which is the average days per month. 1.3, let's call it $1.3 million per month. So technically, in order for the chart to go flat, there needs to be an organic amount. And let's say all of these miners do sell straight away, all day, every day. Then in order for the subnet chart to go flat, there needs to be $1.3 million per month worth of buying. Now, here's the thought experiment, which absolutely fascinates me and a lot of other subnet owners is that if you have a product out there that launches into the real world and starts making actual real world revenue, and let's say Ridgers does that, and it gets to the point where it's making, I don't know, $5 million a month. Well, obviously the miner amount is going to increase as the price of Tau goes up, but and also the price of Alpha. But just for this snapshot of an example, what could happen is that of the 5 million a month, Shaq then goes, oh, we've got, I don't know, 250 grand a month worth of OPEX. And then he'll just do the rest for buybacks. Or, what he can do is, at the very least match the full miner sell side or even a bit more. And then every month he can just do subnet token buybacks so that the chart just goes up forever. And it will go up forever as so long as his real world revenue outpaces potential total sell side. So no subnet has achieved that just yet, but I reckon this year this will happen. And then that subnet token price, in theory, will just keep on going up and up and up and up. And that is when you really do see an increasing amount of eyeballs on Bit Tensor. Because in theory, this would just go up forever. Well, yeah.
So let me try and answer a few questions here all at once. So Sasha says, you mentioned that those who don't perform get kicked off. What are the subnet performance criteria? And then Andrew's asked, how does the failure, deregistration of a subnet, impact the value of Tau? Let's try and wrap those two together. So the subnet performance criteria right now is pretty straightforward. It's based on Tau flow. It's based on the popularity of that subnet. How many people are buying that subnet and putting Tau in rather than taking Tau out of it and selling the alpha token, whether that's because they're getting mining emissions or because they were investors and now they're putting that Tau out. So the subnets that have got the least Tau flowing into them are the ones that are up for deregistration. How does that failure impact the value of Tau?
It doesn't.
It doesn't. So the way that I think about this is that the 128 subnet slots are really like 128 properties on a high street. And you might have a business that launches in one as a cafe and it runs for 7 months, doesn't make any money, and then closes. It doesn't change the value of that building. Now, if you've got 100 fantastic businesses running out of the 100, then the value of the whole thing increases, and the value of each building. Like, I'd like to have a building that had got huge footfall because there were fantastic buildings either side of it. I'd rather have, the value of something on Bond Street is going to be much higher than the value of something on Luton High Street, and that's really where, if you've got loads of successful subnets, then the value of Tau impacts a lot more. Much more positively. So the failure of a single subnet doesn't impact the value of Tau. The failure of lots of subnets, or the success of lots of subnets, does.
Also, it's like reincarnation to a degree, because this chart here shows us how much it costs to buy a new subnet slot. So every time you see a vertical line here, it means someone's bought a subnet slot. So the last time someone bought a slot was the 5th of January, so 3 days ago, and they bought it for 279.66 Tau. The moment someone buys a subnet slot, whoever's at the top of this dereg list gets booted out. So yes, so right now, if you wanted to buy a slot, you would buy the price going, and it decays every day, this price. So the going price today is 357 Tau. So if one of you bought a new subnet slot right now for 357 Tau, distributed training with subnet 38 will be deregistered, and that will be your slot. So this bad team or bad product, this subnet dies, and then your subnet, it gets a slot. And so it is self-pruning. And so if people are not buying your subnet token, you have like a price EMA. And so the actual criteria is you need to be out of immunity. So you have a 4-month immunity period if you're a new subnet. If you have the lowest EMA, you're up here, and then it's done literally on the lowest price. And the beautiful part of this, for an investor, is that the dereg price is increasing. So the actual floor is increasing. I remember, so this is the one most at risk at the moment. We just get rid of the volume and zoom out here. So the price here is 0.0024. I remember a couple of months ago, the dereg price when they started doing this was like 0.001. But now there've been a lot of deregs over the last sort of month or so. What's happening is that there's game theory at play here, because when a subnet gets sort of the at the risk mode, some subnet owners or the fans of the subnet go, "Oh my God, let's buy more tokens to get it out of dereg," and so the base dereg price is growing and growing and growing. In a couple of months, the dereg price may be at 0.03. It's grown a lot recently. So from an investor point of view, you know what the floor is. And let's say that let's say we wanted to buy distributed training right now. You don't lose your money when it gets deregistered, which is beautiful. There's no other marketplace that actually protects investors like this. So let's say right now we bought a whole bunch of distributed training, and let's just look at the wallet list. Let's say, for example, we are this wallet here. Okay, we buy 96.12 tau, and we've got, which means we own 1.92% of the whole network. Oh, sorry, of this subnet. And let's say it gets deregistered. Well, what happens is the amount of tau in its pool, because there's like sorry, Mark, I'm going way too in depth here. What this long story means is there's an amount of tau in the pool. There's 4,860 tau. What will happen is you own 1.92% of the supply. You're going to get 1.92% of whatever tau's in the pool. So 4,860. It deregs. You get 1.92% of the tau. You get 93 tau back. So you take a tiny haircut. So here you got 96 tau. If it deregs right now, you get 93 tau back. It's not bad.
No. Is the number of subnets set to increase? If it is, when? What way? What's the schedule?
It won't. It will increase. We don't know when. The theory, and I was a big campaigner for the situation that we have at the moment, where because before there wasn't a cap and there was deregs, and then there was a cap and no deregs. And what I was saying is that, look, we need a cap. We need to keep it to 128 subnets, but we need deregistrations to come back in. So we're in this beautiful place now where we have this hard cap of 128 subnets. We got deregs. So what it's doing is causing a lot of pressure within Bit Tensor to get better. And so we're not firing on all cylinders at the moment. As I said, half the subnets that exist are utter poppycock. It's just dog shit. So the more that we can keep this cap with deregs, hopefully some good teams come up. And then once we are firing on better cylinders or more cylinders, they can lift the cap, and then more subnets can launch. Why are you smiling?
Because I loved your use of the word poppycock, and I thought, oh, that's just such a delicate way of putting it. And then you, in the same breath, use dog shit. Just something for everyone, isn't there? As there was earlier when you when you as usual mixed something up, and you said that Ridges was going to eat Cursor's lunch money. Like, who's going to eat someone's lunch money, Siam? You don't eat people's lunch money. You eat their lunch or steal their money. You don't. Unbelievable. Brendan, yes, we will. Siam is recording this, so we'll get this out. Andrew, miners in Bitcoin do exactly the same thing again and again. Miners in Bit Tensor have to do completely different evaluation tasks for each subnet, so they're much less specialized. How can we be confident that miners are doing a good job? Easy one.
Go on then.
Validators?
Yeah.
That's it, isn't it, really? There's a whole team of people that literally just check the work that the miners are doing and make sure that they are ticking off all the boxes on the incentive mechanism.
Yeah, every subnet is doing a different thing, obviously. So you can't take the SafeScan subnet that's doing optical melanoma detection. The validators on that subnet are checking whether the algorithm is correctly detecting cancer or not. you can't use those validators or that validation mechanism to validate another subnet that's doing inference or compute or data cleaning or data labeling or yeah, computer vision. So every subnet has a different set of challenges and problems, and it's up to the subnet owner to come up with a really good validator mechanism. So they give, it's like if you're the subnet owner, you're creating a cheat sheet for the exam. You give the cheat sheet to all the validators and go, look, here's the cheat sheet. We have thousands of miners or 256 miners doing the exam here. You need to mark who gets the best result.
Yeah, my answer was shorter. Frederick says, if it's all open source, why won't big tech just steal it? Well, they can, can't they?
They can. So this is again, I'm going to have to talk about ridges here because it's just an easier way to explain it. So ridges wanted to effectively spill open the guts of Anthropic and disintermediate that magic black box. So they incentivized the Bit Tensor network to create a really good coding assistant. But one of the drawbacks is like, well, wait a minute. The moment you create a better agent than Cursor or Claude Code, what's stopping Anthropic just taking that open source code and go, okay, thanks, we're going to put it in our black box. And so it's a very tricky situation. So what they're now doing is they're effectively using the customer as sort of like a validator and an improvement. How do I easily explain this? So they'll have a whole bunch of different agents out there, and then they are sort of black boxing it a bit. So when the user is using the Ridges assistant, they won't know, the user won't know which model it's using. And so Ridges as the subnet will have to effectively swap in and out the different agents. The user will go, oh, actually, I preferred the other one. And then that miner is better rewarded. And so they're using user feedback to determine which is the better bot. And yes, so that's a very poor explanation of ridges.
Yeah, a much easier explanation and a way to answer this
Strawberries.
is simply that it's constantly improving. The end product of this is not today's code or today's results. It's the fact that tomorrow it's going to be better. So anybody that steals what you've got today is like Siam's farm stealing a basket of strawberries from my farm. It doesn't help him out because he's going to be overtaken by my much more efficient strawberry production method.
Mm.
So Ridges is state of the art today, and I can steal that code, but I haven't got an incentive mechanism and a way of improving that code, and Ridges has. So tomorrow they're going to be better than me, and the day after they're going to be a lot better than me again. And that's really where I see this is, yeah, you can be open source and you can give away today's results because the mechanism means that tomorrow's results will be better still.
Completely agree. And another example is Elon. Elon fired some shots over to Warren Buffett because Warren Buffett is always about moats. You need a business with a moat so no one else can compete against you. And Elon, a couple of years ago, said moats are bullshit. Moats are for people that don't innovate and don't move fast enough. And so Elon said, what you actually need is innovation. Your innovation cadence needs to be faster than what your competitors can innovate. So if we take the SpaceX Starship, it's the best spaceship ever that humans have ever created. It can deliver 100 tons to orbit. It's all out in the open to the point that China are now copying the blueprints of Starship. But they're like 2 years, 3 years behind. And Elon is just innovating. He's catching Starship, rockets with chopsticks and all sorts. So they are innovating a lot faster than anyone can copy. Bit Tensor is exactly the same.
Yep. Andrew again with, do subnets graduate out of Bit Tensor? If so, how?
No.
No. Good. That's the shortest answer you've actually given. And I am actually going to accept it because we are way over 20 minutes. Reese, big up the RT ski trip fam. Danny, strawberry fields forever. Chris, how do you guard against a rug pull like 10x?
Very good. Very good question. So I don't personally like the decentralized finance subnets. And so what happened is that with the rug pull, that wasn't anything really Bit Tensor related. It was a smart contract sort of exploit, or where they were doing some. This is a long story, but y-
I know the answer.
okay, yeah, go for
So
it.
the answer is twofold. First is that if you are investing in the alpha, as Siam just said, when that subnet gets deregistered or something goes wrong, you're going to get all of your tau back because the protocol will
Most,
take care of you. Most.
most.
93 out of 96 tau there. Sometimes you might even get more tau back than you put in. That's the truth of it. You might get a hair extension. What 10x was you were handing your alpha over, your tau over into a protocol that wasn't part of the main protocol. So you were just trusting it, somebody else's wallet, and they were saying, yeah, trust me, bro, it's all going to be absolutely fine. So the first way not to get rug pulled is not to just go on the old trust me, bro. Um, there are levels to this. There are completely undoxed people who never show their face. You got no idea who they are, which time zone they're in. You got no idea. And then you've got people that are all the way out there, like me and Siam, with our faces on everything, easily accessible. If they don't know exactly where we live, then they can work it out in half an hour. And when you've got that level of transparency and trust, then people aren't going
Yeah.
to. Those people that are putting their names to things where people can easily find out where they live, they're not going to try and run away with $100,000 of anybody's money because there's going to be some angry and
Yeah.
upset people there, and that isn't the way that it works. So that is a way to guard against it.
I do chuckle sometimes when they go, "Oh, Simon, you're just a scammer," and then I think, well, wait a minute. If I was a scammer, would I run a regulated hedge fund where you have all sorts of checks and balances up the yin yang, and then would we become directors of a PLC where there's even more regulation and oversight? It's like,
Classic scam behavior. That's exactly what a scammer would say, though, isn't it? Very difficult. Danny, if I had some towers looking to stake in a subnet or two, where would you park that tomorrow? This is not that webinar. Which subnets does Astrid have its interest in? Not that webinar. 5 years down the line, what's an exit for the subnet only? Exit for the subnet owner? What would the exit be for Astrid? Well, it depends on the subnet, doesn't it?
yep.
Every subnet is different. Everyone's using Bit Tensor differently. It's the same as in any business. Some businesses float. That's an exit. Some businesses sell. Some businesses do a management buyout. Some business owners make all the money they could ever need from the business, and they don't need to sell it. They just put managers in place. Each subnet is its own business that is using it differently, and exits will be very, very different for everybody. Sasha, why are we looking to hold alpha tokens then for an exit or trade sale of the subnet? Alpha is like tau limited. So the thesis there is that unlike dollars or pounds, where there are buttons that are attached to printers that print more of it to devalue each pound or each dollar, that is not the case for alpha or for tau. So the tau that is in people's wallets today is not, there's not more of it available to come out. So when there are more subnets, when there are more good subnets than the 128, when the subnet cap is lifted, when there are more people trying to buy tau, our conviction is that the value of tau is going to increase because as there's more demand for it, there cannot be more supply. Supply will tighten over time, and it's exactly the same for alpha. The alpha is injected into each subnet every day on a given schedule, and we believe that the value of alpha will increase. So it is asymmetric because if a subnet fails, then you get your tau back. If a subnet succeeds, then you get a lot more tau back. Unless you're going with the trust me bro 10x and you're handing your tau over to somebody who's going to swan off to somewhere sunny with it.
I mean, I naturally don't trust any subnet where the subnet owner is anonymous. It's a hard pass for me. I want to see a real person. I want to see their face, and yeah. So that's just a little investment filter that you could apply for yourself. So if you're too scared to show your real being, your real self, then you're hiding something. And I don't want to allocate money to anyone that's hiding something.
Yeah, true story. Gus has left. Trevor says, could you advise in Tau stats what is the best resource for queries or issues?
Um,
Trevor,
in what sense?
Trevor, you on?
I'd use Doug. So if you ever have any questions in Tau stats or whatever, go to the bottom right over here, and it's got like an AI Doug, and you can ask it the most basic of things. So if we have in fact, let's do a little experiment here. What's the next question? I'm going to copy and paste it into Doug. Um,
Uh,
uh, uh, oh my Lord.
we've moved into investment world here, really.
Yeah. Um,
I think you're gonna have to go back up and
like a easy. I don't know. Here we go. Do subnets graduate out of Bit Tensor? If so, how? I'll just copy and paste that. And it's actually it's a really good AI if you have Bit Tensor type questions. And they always say you're an amazing question asker. Great question. In Bit Tensor, the idea of a subnet graduating refers to the possibility that a subnet could eventually. Yeah, I'm not going to read all that. But anyway, ask any question, it'll give you an answer.
okay, we've got some questions here on investment levels, timelines to ROI. Andrew's saying this is his third Zoom session. He still doesn't understand how the Bit Tensor network works and how it's better than a project or a subnet having its own token. Why is investing via Tau or the fund better than investing directly into projects? I'll cover that one off very, very, very quickly. And that is that Siam talked about the S&P 500 earlier. And in any index like that, you've got some really high performing businesses, and then you've got the others. Everybody wants the performance of the Mag 7. Nobody wants the performance of those that are about to be deregistered from whichever index it is that they're sitting in. If you invest into Tau, you're going to benefit from the world beaters, but you're also going to have the impact of those that aren't so hot. If you can find a way of just picking the ones that aren't scammers, that aren't extractors, that are going to be building something properly in this ecosystem, then I would suggest that you're going to see a better return than you would if you were just backing every horse in the race. That said, I think you'll still see a positive return on every horse in the race.
There's a question we missed, and it's from Billy, and he says, what prevents a successful subnet leaving BitTensor? And it's a good question. So you have to remember that one of the main reasons, or the main reason for a subnet to exist is that it's using a workforce that you don't have to pay to help solve your issue. So let's take Subnet 9, for example. Subnet 9 is called IOTA, and they do distributed pre-training slash compute. So what they now do is that they realize that getting compute and incentivizing compute is really expensive. OpenAI and Elon, they're building all sorts of data centers. Elon's about to put big old data centers or compute rigs up in space because that really is the most efficient way to do it. And so IOTA, so Subnet 9, they've approached it differently. They've realized that distributed whatever is nearly always the best. Everything from AlphaFold, where they got, some of you may have heard of Fold at Home, where, well, in fact, let's talk about IOTA. So what IOTA does, if you can see over here, can you see my finger? There's a
Yes.
laptop there. So I am mining for IOTA right now. That's a little Apple thingy. I've connected that laptop to the IOTA network, and it's contributing to the compute and inference of IOTA. So I started that on the 12th of December, and I have already made 64 alpha. So let's put things into perspective here. If we now go to Subnet 9, IOTA, 64 alpha, whoa, it's done well. If we convert that into dollars, you see in tiny bits here, $7.24. So $7, $7.24 times 64. Since the 12th of December, and by the way, it's had about 5 days of out because over Christmas they did some upgrades. My little laptop sat there has already made $463. And it's just using the spare compute because it's just a laptop that's just sat on the shelf there, and it's just using my internet and the laptop's capabilities to help do distributed pre-training. Now, let's say IOTA made some breakthroughs with their algorithm and they got so successful and they wanted to leave. Well, how could they? They can't because they need the Bit Tensor miners. I am a Bit Tensor miner for Subnet 9. They can't leave Bit Tensor because they'd lose all of the people contributing to their uptime.
Okay, we have had one question in from Andrew there, which is a good question. And what it says really is that we, as usual, haven't necessarily done the best job of explaining everything here. And it is very, very difficult because you sometimes you forget what you know, you forget your learnt knowledge. So when you're explaining something, you take as a given some of that knowledge. And I think that perhaps we haven't here. And partly we haven't because we came at this clearly as not an investment-based webinar. And I think we've delivered on that. But Andrew's question here is, I'm not clear how you benefit from the upside from any one subnet. So I'm going to set this up. You're going to finish it off beautifully with some sketches. And then we're going to close this like two magicians on Vegas. So the first thing, Andrew, is that when you are investing in a subnet, and Siam did say this earlier, but perhaps it wasn't clear enough, you have to invest through tau. So you have to buy tau, and then you swap your tau tokens by staking them to the alpha of that subnet. And when you do that, the price of that subnet matters a great deal. So let's say that when you bought one tau and you could swap that tau for 100 alpha tokens, and then a year later, you're hoping that the value of that alpha has gone up. So when you swap back to tau, you've got more tau. It's that relationship between the two that decides whether that was a good investment and you've made tau, or a bad investment and you've lost tau. And then there's one other complicating factor in answering that question, which is the APY, which is where Siam's magic and his 90-second explanation is going to be a perfect finish to what has been a wonderful 20 minutes.
Are you sure you want me to go through that?
Yeah.
Oh dear God. Brace everyone for another 2 hours. No. So do you remember how I was talking about emissions curves? So Bitcoin looks like that. Same with tau. A subnet token, it has a 2-year halving. And so it pumps out more tokens a lot faster. And so if you're in a subnet in the early days, which is right now, and you own an amount of subnet tokens, the APY you get just for owning it is incredible. So if you were to go to taustats.io, you then go to investors, then you go to yield. You can see the average yield for any subnet you want. So if we click on, I know, IOTA that we just did, the average yield for IOTA is around sort of 50-ish% APY. Let's look at Templar, that's about 62. And you could look at all sorts. This one's about 80%. And they do decline over time. This one's about 55%. But this one's almost 200% APY. But because you earn more tokens every block, so every 12 seconds, what this means from a compounding perspective is that you compound on a daily basis. So this is, let's do an example. So obviously, if you buy a token and the price goes up, that's great. But if you are a more long-term thinker or a long-term investor, you can use this APY to your advantage in a dramatic way. So every 2 years, for subnets, there's a halving, which means your APY will also halve. So let's just do a 3-year example. Let's just say for the next 18 months, let's be really pessimistic. Let's just say we're only getting 40% APY for 18 months. And then we're only getting 20% APY for another 18 months. Okay? That's what we're going to use. And let's do some math. So you start off with your $10,000 and you go out and buy some tau. Right now, that's $300 per tau. So your $10,000 divided by 300, you've got 33.333 tau. And then you go out and convert your tau into a basket of different subnets, not just one, or ones that you think are going to last for 3 years, etc. And let's just say and the average price of your subnet token is, I don't know, 0.005, which is a good average price. A lot of the things I'm playing with are about that price or below, which means you'll end up with about 666 alpha. Now, this is where a little bit of maths comes in. So for 18 months, we've got 40%. So you do 0.4 divided by 365 plus 1 to the power of 547. That's how many days there are in 18 months. That gives you your factor. Then you times that by the amount of alpha that you have, which is 6666. That means after 18 months, you then have 12,135 alpha. But you then have another 18 months of compounding at 20%. So you then do 0.2 divided by 365 plus 1 to the power of 547. That's the factor. Now we've got 12,135. You now have 16,374. 16,374 alpha. So if the price of your subnet token or tokens does nothing, it just stays flat for 3 years, well, here we go. Let's do a few different things here. Let's say that the average alpha is here, or let's say it goes up a little bit over a 3-year period. What this means is that you then have 16,374 times the original price, because it's just gone flat, 8187. Yeah, so if the price stays flat, you've gone from owning 33.33 tau, you now have 81.87. But I doubt it'll stay flat. As you already know,
so the price you're talking about is the price of the alpha itself.
Of the subnet,
this is how the subnet is valued. So when you bought into it at the start of this period, you bought in at 0.005. And if it stays flat, just because of the APY, the yield, effectively the interest rate that you are being paid to hold that alpha, the number of alpha that you've got has gone up quite dramatically.
Yeah, and the deregistration price is already climbing, so it's unlikely the price will stay flat. If your subnet's going to live, it's going to grow. So let's just say it just gets to 0.02 over the next 3 years. Well, you've got 327 tau over here. So with just a little move, or little, it's a 4x in price over 3 years for the subnet token, which by the way happens all the time. You go from 33 tau to 327 tau. So there's one variable, which is what is the price? What does the price of your subnet token do over 3 years? But then what is the price of tau in 3 years' time? So again, let's do two things. Let's say it stays flat at $300, and then let's say, I don't know, let's be really pessimistic and use $1,000 tau. And by the way, I can justify that very easily. So in this case, your 81.87 tau times $300, you're now at 24,561. So 24,561. So you've started with 10K, it's now 24,500 in just 3 years. Or in a still a pessimistic outcome in my view, your 327 tau times 1,000, you got 327K.
I'm pleased we've got a calculator out to check that.
Yeah. And so, that, like, I think this is more realistic, this column over here. So what this means is that, I know it sounds batshit crazy, but That's the 32.7x with this bit here, from 10K to here, with just by mediocre growth and on both the price of your subnet token and that. So now fast forward, imagine if you're an entity and you had something, like 17,000 tau to deploy into alpha and that to compound over time. So this is why I'm a big fan that any PLC, any limited company, any spare cash that you may have, you put it into tau, you put it into subnets. And by the way, this is the last example, and then I promise, Mark, I will shut up. I've done a real life experiment, and I think I saw Reese here. Reese is someone that's been following this. I have a dormant company, and this dormant company had a bit of cash. So what did I do? I put all of that cash into tau. I'm just setting this up before I share my screen over here. So what happened is, this was before subnets. I put it into tau and I let it just do its thing. And then subnets launched. And then I've always had this theory of that, or since sort of February time, I was like, don't buy the top 10 subnets, or don't buy the top 25 subnets, because one day there will be a subnet in the top 10 and then the other day it will just be gone. And you have to be a bit more snipery and ninja-like with your subnet selection. And there's a lot of discord around this, and everyone's, no, you're wrong, and everyone had their theories. So what I did is I set up a public wallet, and I shared the wallet address to the public, and I said, look, here's a real life example. I'm going to buy like 25 different subnets. I'm just going to leave it. I'm just going to let it just completely, just do its thing. And I think it's not going to be good news. So if I do this, 1 second. I'll take a little screenshot. I'll show you the whole page in a minute. So what happened? So I bought a whole bunch of subnets in April. I started with about 100 tau, but then by the end of August, it got down to 47 tau. All the way down here, this was 47 tau. And then I was like, look, I think the experiment has been proven. I'm just bleeding money here when I know it's going to bleed. So I'm going to literally put my money where my mouth is and do like I do with my other wallets, with what we do with DSV and whatnot. And so I was active in this active. I then became active in this wallet, and then this is what happened. This is the page. This is that wallet address. So we got to a low of like 47, 40, what was that, 40, 48, 47 tau. Then I started being active beginning of August, just being more selective. And then this particular wallet went up. So the green stuff is how much tau is in the wallet. The red is like the dollar valuation of it. I don't care about the red line, because that's dependent on the price of tau. But all I care is how much tau is in this wallet. So just by being a bit selective, you can see, you can grow the amount of tau. And so, so when we do all of these examples, like with all these numbers, etc., like I really think these are pessimistic, because you can grow your pot like this manually, and also get the APY over a period of time, and then it shows you, what you have, etc., etc. So anyway, long answer. Sorry, Mark. Welcome to our TED Talk.
Yeah, I mean, do you know what? When you every time you do that, I always just think, wow. Do I think the price of tau is going to go up? Yeah. Do I think that the APY means that I'm going to get many, many, many more tau back when I'm invested in? Yeah, I do. And is it all a bit crazy? Yeah. But did there used to be a website where if you pressed the button, you got 5 free Bitcoin? Yeah. So, it's all about timing, isn't it? Is Bit Tensor absolutely perfect right now? No. What is one of the main challenges that it faces is trying to articulate what it is so that people understand why it's so powerful. And that's why our 20-minute TED Talk is 90 minutes in and counting. And that's us with a really, really defined mandate tonight of explaining what Bit Tensor is, and really nothing more than that. But I think we are good to wrap up here. I know we haven't probably answered every question, There's definitely, a case for a 24-hour Bit Tensor marathon where we do that. We are back. If you're interested in investing, then we are doing another webinar on Monday. I think it's 3 o'clock in the afternoon UK time, where we are going to be talking about DSV and how we have invested through DSV and what we do on that front, and taking some questions on the investment side. If you want some reading in the interim, then dsvfund.com is your place to go. That has got all of our revenue search episodes on there, which are interesting, where Simon and I typically interview a subnet owner. We try and keep all of those to around 20 minutes as well. So many of them are around about 90. But there's some interesting ones in there. And of course, you can grab the deck for DSV Fund, which has got some interesting information in it as well. So if you're interested, have a watch of some of those videos, grab the deck, more information there, and then we'll be back on Monday for those that are interested in finding out a little bit more about it. Hope that's been useful. Thank you for staying with us for such a very, very long 20 minutes. And you've recorded this, so we'll put the recording out. So if you've missed bits, catch up on that. Thanks, guys. Good night.
Cheerio, folks.